Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And we are well in the midway of the week. And while Nifty has defended the 25,500 for both the days so far this week, the chase still continues to be the benchmark indices clinching its all-time high. Well, for the starters, trends in the GIFT Nifty today is pointing out to a positive start today. Pre-open rates are also showing up a bit of a positive start despite the choppy session that we saw yesterday. But if you look at the support that is coming in from the global cues, that remains a little bit elusive in terms of stock performance. But the Trican day, the dollar, yields and oil prices, all of them quite well behaved at this stage. But yes, coming to how the global markets have fared, US markets were mixed overnight and so was Asian markets this morning. Quite a bit of comments, blame game, hot tweets flowing in the global spectrum. We did see Trump escalated its feud with Elon Musk, where he said, quote unquote, that without subsidies, Musk would have to head back to South Africa. So the battle between the two global newsmakers continue to be tight at this point of time. Even Fed Chair Jerome Powell also commented that if it weren't for Trump's tariffs, rate cuts could have been much sooner. So like I mentioned, plenty of statements which is flowing out there, flowing in the global spectrum at this point of time. But what India needs to watch out, that is the persistent deadlock that has been emerging with the trade deal with the US. Talks are in the final stage and US Treasury Secretary has said a deal would be announced soon. So any development on this could push the markets going ahead. So yes, we'll be watching our developments on that front too. Now coming to the individual stocks, we have some passenger vehicle stocks which will be in focus today. Yesterday we did see that some of the auto sales data did trickle in. Today also we'll address some of those counters. For instance, your Hyundai Motor, Maruti Suzuki, all of them seeing a drop in their total sales as well in the month of June. Also, we'll be talking about Asian Paints, given that the CCI has ordered a probe into the market abuse charges against the company. So we'll watch out for that counter as well. So yes, all of those to keep on your radar. And like usual, we will be addressing your stock related queries also. So keep dropping them on our live feed. But before we delve deeper into the show, let's quickly take a look at the top headlines this hour. Stocks on Wall Street end mixed. The Dow adds 400 points. S&P 500 closes flat to start new quarter as investors rotate out of tech stocks. Tech-heavy Nasdaq falls over 160 points. Meanwhile, US futures tick higher as Trump's tax bill clears the Senate and investors eye potential deals ahead of July 9 deadline. Asian markets open mixed, mirroring Wall Street as investors digest latest comments from the US Federal Reserve Chair Jerome Powell, who said that interest rates would have been cut if it weren't for Trump's tariffs. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Crude oil prices remain steady as investors take positive cues from demand indicators. All eyes on upcoming OPEC Plus meeting, which will announce an output hike for August. Gold prices, meanwhile, also rise on safe haven demand after US President Donald Trump's Big Beautiful Bill gets passed in the Senate. India's trade negotiator extends his stay in Washington as talks enter the final stage of sealing an interim deal. Stalemate continues over agri and dairy sector, while US Treasury Secretary Scott Bessent says that the deal would be announced soon. And coming to the biggest IPO of 2025 so far, HDB Financial Services is set to make its stock market debut today. The 12,500 crore rupees issue was closed with subscription last week and it received a healthy response from the institutional investors and the high net worth individuals. All right, like I was talking about in the last session, we did see for the both days of the week so far that Nifty has held on to its 25,500 mark yesterday as well. And yesterday we did see Reliance Industries contributing largely to the Nifty's up move. We did see that Reliance Industries, the top big boy of the Lal Street, has gained 4 out of last 5 sessions and is just now 5% away from clinching its all-time highs. But like I was mentioning, for the queue this week and the going ahead of the days, the remainder of the week, India-US tariff negotiations that will be keenly tracked. A deadlock has been emerging given that agri-concessions are something that India has been trying to protect for a long time. Other than that, if we look at yesterday's trading session, broader markets, that fizzled out a little bit of a rally, particularly for the small cap index, which snapped about its 7-day graining streak. On the other hand, mid cap, that continued to advance for the 8th straight session, eking out very slim gains towards the end of the trading session yesterday. But among the sectoral gainers and losers, PSU Bank, that rose for 6th straight session, and FMCG slipped for the 3rd straight session in yesterday's trading session. But coming to the new listing today, all eyes will be on HDB Financial Services, because that is set to make a debut today. The grey markets premium are suggesting that it is expected to make a flat to positive debut on the markets, but we'll watch out if there is any gains which extends after it makes its debut. But we did see that the IPO was subscribed with a good response, 17.6 times, led by the institutional investors, particularly the QIBs. But yes, coming to the fund flows data, FIs, they stand to be the net sellers in yesterday's trading session with about 1970 crore rupees in the cash markets. However, DIIs held the fort and they bought stocks which was worth about 725 crore rupees in the cash markets. Nifty put call ratio, that has climbed to about very slim gains, 0.88 from 0.81 levels, and in the FNO ban, RBL Bank continues to be a part of the list. So yes, all in all, some cues, that is, we are up and gearing for today's trading session. Just 5 minutes to go before we hit the open at this point of time. But let's quickly get on board with our technical expert of the show who will make us understand how the markets are going to behave today. Joining me is Nilesh Jain, Head AVP Derivative and Technical Research of Centrum Broking. Nilesh, good morning. We have managed to hold that 25,500 mark for the past 2 days. What's the next that the traders should watch out for?
Good morning, Lovisha. So yes, you have rightly pointed out Nifty defended its important support of 25,500 that has acted as a psychological support, as well as if you look at the derivative data of the weekly FN expiring tomorrow, the data also suggests that the highest OI concentration on the put side is also placed at 25,500. Now that is likely to act as important support zone. From here, it looks like we are likely to see Nifty defending those levels on expiry basis, and today looking at the GIFT Nifty and the pre-opening session, which is indicating Nifty is likely to open somewhere around 25,600 level. Again, important level on the upside is 25,600, where yesterday as well Nifty faced immediate resistance near about those levels. So it is important for the Nifty to break 25,600 level for further upside to continue on the back of a short covering, which we believe seems to be likely on the card. And Nifty is likely to inch towards 25,700 to 25,800 from a very short-term perspective. So buy and decline should be the strategy. Looking at the volatility index India VIX, which declined 2% yesterday. Overall, it has been forming a lower top and lower term formation, and a constant decline was seen, which is giving more comfort to the bulls. Currently, it is at a very much comfort zone for the bulls at 12.53 levels. Now, coming to Bank Nifty, where we are getting more confidence on the back of buying interest that got emerged in the index heavyweight, not only heavyweights, but also PSU banks, where we have seen a good spurt yesterday. So on the back of that, we are expecting Bank Nifty to outperform from here compared to the Nifty index, and on the upside, 58,000 to 58,500 kind of levels can be seen in the Bank Nifty. So support is placed at 57,100. So that should be the stop loss, and buy and decline should be the strategy in the Bank Nifty as well.
Okay, buy and declines for Bank Nifty. Let's also talk about the broader end of the markets, because yesterday we did see some pressure which did emerge in the trading session. But Nilesh, can we expect some larger negativity to emerge going ahead?
I don't see any major negative sentiment in the broader markets, although yesterday we saw some bit of a profit taking. But good part was that after witnessing some bit of profit taking towards the closing hour, we have seen a sharp rebound in Nifty mid-cap and Nifty small-cap space. So that rebound has given some bit of respite and giving some bit of confidence as well. So we may see a follow-up move to continue in the broader markets. Nothing seems to be a bigger worry as of now. And if at all we see any meaningful correction, that should be used as a buying opportunity. The broader market structure is also looking positive. We have already seen a good momentum in last couple of trading sessions. In fact, last 6-7 consecutive sessions, we have seen a formation of higher highs and higher lows. So there could be possibility of some profit taking, but the undertone looks positive. The focus should be on the long side.
Okay, all right. Just a couple of seconds before we address the open. But PSU banks, that seems to be doing quite well. We'll watch out whether or not the Nifty PSU bank holds out the rally in today's trading session as well. Up about fifth straight day. We'll watch out if today is going to mark for the seventh trading session as well. But yes, the first rates coming on your screen. We have opened in the positive territory. 0.2% gains that is coming in for the Nifty 550 mark. That is where we are. We are trying to aim towards the 600 mark at this point of time. But yes, good open at this point of time, given despite the muted global cues and the mixed global cues that we saw overnight from the US markets and of course from the Asia Pacific markets. If you look at from the Sensex perspective, Sensex also doing well with about 100 points gain that is coming in. So a little bit of a muted moves, but however we are marginally higher in the higher terrain at this point of time. Let's take a look at some of the sectors at this point of time. Bank Nifty index seems to be doing well with about 0.1% gains, flat in the trade at this point. Nifty Auto Index also with about very mild gains. Other than that, FMCG index continuing its downward trajectory for the fourth straight session at this point of time because it is opened largely and mildly in the red. If you look at the Nifty Realty Index is also not doing well in today's trading session with about 0.1% cut that is coming in. And Nifty Pharma Index also flat in the red at this point of time. India Wix seems to be at a cooling point with very mild in the red. And if you look at the mid-cap and small-cap indices, mid-caps with about marginal set of gains and small caps also with marginal set of gains that is coming in. So the breadth of the market seems to be on the positive territory, but we'll watch out whether this sustains throughout too. But coming to some of the gainers and losers on the Nifty 50, let's take a look. Infosys seems to be doing well, 1.8% uptick that is coming in for Infosys. Other than that, we can see Hero MotoCorp doing well. We did see that the total sales had risen for the month of June. So that stock seems to be doing well. All in a larger perspective also, two-wheelers seem to be doing well given that the June auto sales data seem to have fared better than what the PV makers did. Other than that, we can see ICICI Bank, TCS, Grasim particularly with about 0.7% gains that is coming in, and Wipro also seeing a gain of about 0.7%. So some of the IT names are dominating the charts of the Nifty 50. But however, on the way down, we can see IndusInd Bank with about 1.8% cut that is coming in. We did see that yesterday on the month, in last month, we did see the deadline of the CEO candidate for that RBI had to submit. So yes, the stock is not doing well with about 2% cut that is coming in. Asian Paints with about 2% cut given the CCI has ordered a probe to investigate the matter of whether or not the company has been abusing its market dominant position to So that is what Asian Paints also not doing well. Trent, Bharat Electronics, one of the top gainers yesterday given that all the defense pack was doing yesterday quite well. We can see a little bit of a profit booking in today's trading session. Bharat Electronics seeing a cut of about nearly 0.5% or so. And Maruti Suzuki also, like I was talking about, the PV maker seeing a pain in the month of June for the sales data. Maruti Suzuki also seems not to be doing well in today's trading session. But yes, coming to IT stocks, they have been faring well in today's trade. Infosys, TCS, Wipro seeing a good set of gains ahead of its Q1 results, which will be coming out next week itself. Nilesh, what are you watching out? Anything that you're liking from the large cap IT majors ahead of the first quarter results?
See, Lovisha, within IT pack, first of all, Nifty IT index is giving a good breakout today. Good momentum is expected to continue as far as Nifty IT index is concerned. 39,750 to 39,900 kind of levels we are expecting on the upside, and support is placed at 39,000. So within this space, stocks like Infosys that is looking attractive at current level, given the kind of up move that we have seen today. Good price and volume breakout we have seen recently in this particular counter. So we are expecting a follow-up move to continue towards 1655 to 1680 on the upside. Stop loss should be placed below 1605. So Infosys will be our preferred bet within the large cap space, followed by SCL Technology. This particular counter has been hovering above its 200-day long-term moving average. It is also trading well above its all long-term and short-term moving averages as well. So we are expecting a follow-up move to continue on the upside towards 1780 to 1800. And 1700 should be the stop loss in HCL Technology. And not only large cap, But also focus should be on the mid cap and small cap IT names like Coforge, Birlasoft, LTIM. In fact, all these stocks are also witnessing a bit of momentum that we have already seen yesterday and today as well. So Birlasoft is also looking positive for 455 to 460 levels on the upside. Stop loss can be placed below 430.
Okay, all right. Let's address some of the auto stocks also at this point of time. Let's see how Hyundai Motor, we did see that yesterday they saw a 6% Y-on-Y drop in total June sales, and even Maruti posted a 6% drop on a year-on-year basis in the June total sales. Hyundai Motor seems to be not doing well with about 0.7% cut that is coming in today's trade, and Maruti Suzuki also with about 0.2% cut. But yes, how do you view both of these counters, Nilesh? So far this year, if you look at and from the last month perspective, Hyundai has still outperformed Maruti in terms of stock performance.
Absolutely, Lovisha. So, post listing, we saw some bit of consolidation that has extended for a couple of months. But now, recently, in the month of June, we have seen the momentum has picked up and the stock is making a hat up and a bottom formation as well. So, a good momentum seen for on month basis for the past two consecutive months in this particular stock. The structure is still looking strong. And although we have a limited data, but whatever data is available is indicating that counter is likely to move towards 2400 to 2600 levels from a short term perspective. It has a very strong support at 2150 levels. So some bit of profit taking may extend from here towards 2200 to 2180, but that can be used as a buying opportunity, keeping a stop loss below 2100. So Hyundai looks positive. Maruti, on the other hand, we are expecting this consolidation to continue because the stock is stuck in a very tight range. 12,100 is acting as a very strong support and 13,000 is acting as a kind of a barrier for this particular stock. So that's the broader range. We expect this counter to oscillate and move sideways.
Okay, all right. Let's also address one of the top losers on the Nifty 50. That was your Asian Paints, given that CCI has ordered an anti-competitive behavior on the company. We did see that CLSA has come out with its underperformed rating on Asian Paints and have given out a target price of 1966 per share. CLSA has also said that this development highlights and heightens these regulatory scrutiny on how established players respond to the new entrants. So yes, that is coming in from CLSA on Asian Paints. And if you look at from June lows, the stock has done quite well. If you look at the chart, it is seeing a good structural uptrend at this point of time. But yes, on the CCI probe, Nilesh, what is your view on the counter on Asian Paints?
See, Lovisha, we did see some bit of recovery from the lower levels, but the major structure is still a bit of a worry because we are not witnessing a convictional or a decisive breakout in this particular counter. It is still trading well below its long-term 200 exponential moving average, which is currently placed at 2460 levels. So I would rather wait for that breakout and post, then we can buy. But as of now, it looks like more sort of a sideways, no clear trend as of now. So better to avoid for the time being till the time we don't get any clarity. But if somebody is already holding the long position, can keep a trailing stop loss at 2260 and stay put, hoping that the stock will eventually break out above its 200 exponential moving average going forward. But as of now, it's an avoid.
Okay, as of now, it is a void. Let's take some viewer queries that is dropping on our live feed. They're waiting in anticipation. The first viewer query that is coming in from Reddit is asking that, from Nitin Shaji, is asking the view on Suzlon at this point of time. Suzlon, how do you view on the charts? If you look at from a 1 month perspective, the stock hasn't done well. 5.8% downtake for the counter. Anything that you're watching out for, Nilesh?
See, it is making an attempt to cross 6970. That's the hurdle for this particular counter. Overall, the structure looks positive from a short-term perspective. We are expecting a move towards 72 to 74 on the upside. Since it is trading near its support level, so risk and reward is looking favorable. 60 to 63 is the support, so that should be the stop loss for the long position. And if already bought it, then stay put, keeping a stop loss near about those levels. A gradual recovery we can expect in this particular stock towards 72 to 74. And just in case if it breaks 74 levels, then the next target would be somewhere around 82 to 85. So bigger target can be seen only if it breaks 74 levels decisively.
Okay, all right. 74 levels, that is what we need to watch out for Suzlon Energy. Let's move on to another viewer query. Debuk is asking the view on HCL Tech and Persistent Systems. If you compare both of the stock performance from a 1 month perspective, Persistent has definitely outperformed HCL Tech. But going ahead, what is your view on the counter, Nilesh?
See, no doubt, Persistent is looking still looking better than the other stocks. So overall, structure-wise, looks like it is heading towards 6,400 to 6,500. So positional target comes around 6,400 to 6,500. Keep a little positional view in this particular stock. Keep a stop loss below 5,900. Stay put. The structure looks positive, as I mentioned. The mid cap and small cap ITs are looking better than the large cap stocks like HCL Tech, TCS, Infosys. So better to focus on mid cap and small cap ITs, but also HCL Technology is also in our recommendation list. We are expecting a gradual up move to continue towards 1750 to 1800. This is another good stock, but you have to give some more time in this particular counter. So if you can hold it for next 1 to 2 months, then it's a good bet to stay put, keeping a stop loss below 1680. 1680 is a very strong support. That should be the stop loss.
Okay, that is the view on HCL Tech and persistent systems. Let's move on to another viewer query. Rupak Mohdey is asking, please advise on BLS International because he's seeing, he's still down about by 7%. He's asking whether he should hold on to the stock or should he exit at this point of time. BLS International, what is your view on the counter, Nilesh? So far this year, the stock has been an underperformer.
Right, it has been one of the underperformer. We have seen a continuation of a lower top and low bottom formation. Stock made a high near about 520 in the month of January 25, and since last 6 months we have seen a lot of consolidation with negative bias. Still the structure is looking weak, so strategy should be sell on rally. If at all you see any pullback towards 380 to 385, that can be a good exit level. And if you want to stay put, then keep a trailing stop loss at 355. And wait for a pullback, but it is exit on a pullback only. So structure is looking weak.
Structurally looking weak at this point of time. Let's move on to another viewer query. Alex is asking the view on JSW Energy and is asking what is the major resistance to watch out for. We did see yesterday that the subsidiary of the company, JSW Renew Energy, has signed a battery energy storage purchase agreement with Rajasthan Rajya Vidyut Utpadam Nigam to establish a 250 megawatt battery energy storage system. If you look at from June lows, the stock has done quite well, up 9%. But what is the next level that we need to watch out for, Nilesh?
So Lovisha, this particular counter has been fairly doing well. We have seen good momentum from the lower levels, and if you ask me, like positionally, the stock looks more attractive given the kind of a risk reward at present. Although the immediate hurdle and resistance placed at 545, if it breaks 545, then the next target would be somewhere around 600 to 640, or maybe we can expect a counter to move to a 700 as well. But looking at the overall setup, we are expecting accumulation is happening this particular stock, and positionally we are a little bullish for this particular counter towards 650 to 700. So if somebody can give some more time, like positionally we are very much bullish. Short term some consolidation can continue, but keep a stop loss at 500. Stay put, and if somebody can hold for 2 to 3 months, we can expect 600 to 650 as well.
Okay, all right, 600 to 650 as well. Let's address one particular stock, that is your VMart Retail, because it did come out with its Q1 FY25 update. It has posted about 12.6% year-on-year increase in revenue, supported by the same store sales growth and 15 new store launches. Now the total store count stands at 510 across India. But if you look at so far this year, the stock hasn't fared well, but Q1 still better. Can we expect good up move going ahead, Nilesh, because the stock is doing well today?
Yes, stock is doing good today. We are witnessing a pullback, but I would still wait for a decisive move beyond 900 because the stock has immediate hurdle at 900 levels. That's the 50-day moving average resistance for this particular stock. Good part is that it is trading well above its 200-day exponential moving average that is placed at 850. So it is important for the stock to cross 900 on the upside. Then probably we can expect a move towards 950 to 970. And if somebody is already holding the long position, can keep a trailing stop loss at 845 and stay put. But for fresh entry, wait for a breakout above 900, then it can be bought for further up move towards 950 to 970.
Okay. Let's move on to another viewer query. Anune is asking the view on PG Electropras. He's bought the stock at 844. He's seeing a bit of the loss at this point of time. So he's asking whether he should book losses at the current juncture. What would you suggest, Nilesh? Underperformer once again this year.
Right, we are also witnessing some bit of structural breakdown, although it is trading and hovering near those important support level of 725. If it breaks below 725, then it's a kind of a sell on right structure for this particular stock. Then probably one should exit. So keep a stop loss at 725 first of all, and then if at all you see any pullback towards 780 to 800, use that pullback to exit from this particular stock because the short to medium term structure is hinting that we may see further downtick to continue. So better to keep a strict stop loss at 725 and exit on pullbacks.
Okay, exit on pullbacks. Let's move on to another viewer query. At this point in time, Advait is asking the view on RBL Bank. RBL Bank, quite a good performer given from the past 6 months as well and from the past 1 month as well. 22% returns that is coming for RBL Bank. Can we expect more upside going ahead, Nilesh?
Right, Lovisha. So if you have observed in last few trading session, we have seen mid and small size bank like RBL, IDFC First, CUB. These stocks, even Federal Bank, these stocks have given a good momentum. So structure-wise, RBL Bank is looking positive. We are expecting a pullback move to continue towards 275 to 280. If already bought it, then keep a trailing stop loss at 245 and stay put. We can expect a gradual up move to continue towards 275 to 280. So looks good on the chart. Apart from that, Federal Bank, IDFC First, CUB are the other stocks that are also looking positive.
Okay, all right. Let's move on to another viewer query. Mukul Vaidya is asking on Abbott India. He's asking from a long-term perspective. We did see the stock has seen a good breakout in the month of June itself. What do you expect? How does the chart indicate for the near term, Nilesh, for Abbott?
So if you pull up last 10-year chart, you can see the counter has been trading in a secular uptrend. The structure is looking very strong. It's a good MNC stock. The idea is to buy and hold for a long-term perspective because the stock has a potential to cross 40,000 mark as well. Currently, it is trading somewhere around 34,800. So keeping a stop loss below 32,000, one can ride this rally up to 38,000 to 40,000. And the structure, the undertone looks strong. Buy and decline should be the strategy. The ideal strategy should be buy in a staggered manner. It's a good portfolio stock.
Okay, good portfolio stock. Let's move on to another viewer query. Paddy is asking whether he should invest in Karnataka Bank. We're seeing a little bit of a decline in the counter given that we're seeing top management exits from the lender also. But what would you suggest? Should you accumulate at this decline, Nilesh, Karnataka Bank?
See, we did see sort of a pullback and a breakout from the levels of 205, but that was a false breakout. The momentum got fizzled out. And looking at the recent momentum, we have seen a gap down opening with a good volume attraction. So it seems like we are witnessing a lot of unwinding of the long position in this particular counter. So we may see a follow-up move on the lower side to continue. So it's an avoid for the time being. Avoid taking any contra bet. We are expecting this consolidation to continue with a slightly negative bias. 190 is important support. If it breaks 190, then target on the lower side could be somewhere around 185 to 180. So keep a strict stop loss if somebody has already bought it and it's an exit on pullback. You have better option available within the banking space that we have just highlighted. So probably one can switch to these stocks.
Okay, all right. All right, just one last question before we let you go, Nilesh. Anything that you're watching out for? We are heading towards the Q1 results season, but anything would you highlight as top buying picks?
Right. So defensives are once again back into the action. We are witnessing a sector rotation. So IT and pharma are looking positive. Few selective autos as well. So within IT space, specifically as mentioned that mid cap and small cap ITs are looking positive. Coforge is our preferred bet within the mid cap and small cap IT pack. So Coforge looks positive for 1980 to 2020 kind of levels on the upside with the stop loss below 1910. Coforge can be bought. Apart from that, within pharma basket, Divi's Lab is something that is looking positive on the chart. We have seen a good breakout yesterday. Today we are getting a follow-up move. So Divi's Lab can be bought for upside target of 6950 to 7000. Keep a stop loss below 6750. Yes, it can be added on declines as well.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Nilesh. Thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha.
All right. All right, let's quickly check the markets, how the markets have been behaving before we move on to our next guest of the show. Sensex is up about 100 points and Nifty is also above that 25,550 mark. Advance decline ratio, if you look at, advances are still taking an upper hand at this point of time, and Nifty mid cap and small cap indices eking out good moves as well. Mid cap particularly with about nearly a percent gains that is coming in. If you look at some of the sectoral gainers and losers, Bank Nifty has slipped into the red. Auto index continues to do well with about 0.5% gains. Nifty IT index definitely the top outperformer for today. 1% gains that is coming in from the Nifty IT index. And Nifty Pharma Index also with about 0.5% gains that is coming in. However, what is not doing well today, that includes the likes of FMCG Index down for the third straight session. PSU banks have fizzled out the rally at this point of time, seeing a mildly in the red terrain, and private banks, all in all, financials have taken a backseat in today's trading session. But with that, let's quickly move on to our next guest of the show. We have Sandeep Bagla, CEO of Trust Mutual Fund, joining us. Sandeep, good morning. How are you assessing the markets at the current situation? We are up 18% from April lows on the Nifty. Do you believe this
Yeah, good
upside
morning.
will be
Good
well
morning, Lovisha.
supported? Yeah. Yeah, Sandeep, go ahead.
Yeah, sorry. Yeah. So I think markets are in fine fettle. I think we are in a phase where markets are optimistic about earnings going forward. I think interest rates have been cut. Government has been spending on capex. Things are, currency has been stable. Liquidity is ample. So I think market is in a mood where market thinks earnings growth to sustain at current levels.
Okay. Okay. Sandeep, how are you assessing the tariff deadlock impact on India? FIs have remained net buyers for the past 4 months, but could we see any impact going ahead if the contours of the deal are deemed to be less rosy for Indian markets?
Yeah, I think India is not that greatly impacted by the tariff domestically because India is far greater control on its domestic consumption is far more dependent on consumption than many other countries, and the other big much impact on tariffs. However, globally, the tariff structure is going to have an impact, and those impact will be felt over the medium term. Tariffs are intuitively and economically inefficient. They are not healthy for exploring the efficiencies of the system. So they are a medium-term negative on from a economically perspective.
Okay, okay. Sandeep, we have the Q1 earnings season which is upon us, and we have seen good run up in the markets from the last 2 months. What do you expect? Will the earnings growth momentum support the markets, or could we see some disappointment as we are heading to the earnings season?
No, I think the worst of disappointment on earnings front is behind us. I think going forward, while we might not see many earning upgrades, but I think earnings should not disappoint. I think the interest cost of companies is going down. The both on the budget side and on the capex side, on the interest rate side, there are some factors which are supportive of domestic consumption and investments. So I don't think there will be further downgrades. If at all, I think downgrades have been quite steep, and probably
All right. All right, there's a little bit of a technical glitch we're having with Sandeep. We'll try to reconnect with him soon, but at this point, let's quickly take a check of the markets, how the markets have been doing. We are off the day's high. If you look at Sensex, flat in the green at this point of time. Nifty has slipped below that 25,500 mark. So yes, we are off the day's high levels at this point of time. But however, the broader end of the markets, the mid caps and small cap indices continue to do well. Small caps particularly has fizzled out the rally, still flat in the green, and mid caps in particularly also has fizzled out gains at this point of time. So yes, all in all, we are seeing a little bit of a cool off in the markets, given that the broader end of the markets have taken a backseat at this point of time. However, Nifty Auto Index, that continues to do well with about 0.3% uptick. One of the top gainers from the Nifty Auto Index is that continues to be your Hero MotoCorp with about nearly 1% gains that is coming in. We did see some interesting brokerages notes that came on Hero MotoCorp as well. The first is your by Nomura, where they have shared a neutral call on the counter, and they believe that so far they have not seen general consumers in India warming up to BAS, but they will closely monitor the situation given that the company has launched Hero Vida VX2 at a starting price of about 59,500 rupees. And they believe that the stock is also trading at attractive valuations at the current juncture. If you look at from a June sales perspective, Hero Motor sales seems to be doing well for the June sales. If you look at the total auto sales, sales has risen about 10% in the month of June, higher than it was done in the same period last year as well. Exports also registered quite a good sharp increase, about 140% increase compared to the last month and from June 2024 as well. If you look at from the Morgan Stanley perspective, they have also shared an underweight call in the counter with a target price of about 37.65 rupees per share. And they believe that given that they have launched Vida X2 EV scooter in two variants, they believe that the model offers removable batteries, fast charging, smart and connected features, and the customer response in key urban markets will be something that they will be keenly watching out for. So yes, interesting note that is coming in for Hero MotoCorp as well. But yes, other than that, if you look at Nifty PSU banks, that has also taken a backseat after 6 days of consecutive rally, 0.2% downtick that is coming in for the Nifty PSU bank index. But yes, the top sector that is worth mentioning today, that is your Nifty IT index with about 1% gains. If you look at some of the top gainers on the Nifty 50, that includes the likes of Infosys, TCS, Wipro, all of them seeing a gain of about 0.8% to about 1%. But let's try to reconnect once again with Sandeep Bagla of Trust Mutual Fund. Sandeep, hope you're back.
Hey. Hello, can you hear me?
Hi Sandeep, I can hear you loud and clear. Hope my audio is audible to you.
Yeah, it's fine, absolutely fine.
Okay, all right. Let's quickly understand. Okay, all right. Let's quickly understand your view on the sectors that you believe which is worth accumulating ahead of the Q1 result season. Anything that you like and particularly dislike ahead before we move on to the earnings season.
No, I think we are overweight on infrastructure, on capital goods, on defense. It is not really towards one quarter earnings. I think it's more towards a longer term.
All right, there is some little bit of technical glitch that is happening with Sandeep. But yes, let's take a check of the markets. And markets have cooled off from its day's high. Sensex up about 66 points. Nifty also above that 25,500 mark, once again mounting above that 25,500 mark at this point of time. But yes, like we were mentioning, that the IT earnings will be beginning from next week itself. TCS will be reporting its Q1 results on the 10th of July, and today also the stock is doing well with about 0.9% gains. All right, we have Sandeep once again back with us. Hope this time does the trick. The hat trick does the trick this time. Sandeep, you were talking about the sectors that you would like to talk about before the Q1 earnings season is upon us.
Yeah, sorry. So, we are quite bullish on capital goods, defense and sectors, which are probably not only for this quarter's earnings, but for the earnings going forward. I think that there could be multi-decadal opportunity in defense. we are also fairly bullish on premium consumption and some sectors like NBFCs and capital market oriented companies where we have seen an uptick in growth and in market interest, and I think earnings will follow. So no great expectations from earnings next quarter or this quarter, but I think the longer term prospects are quite in place.
Okay, okay. You did mention, Sandeep, that you like capital goods stocks, but today I was reading out a report which said that the private capex has seen a sharp fall in 4 years since December 2020 in the first quarter of this year. How would you still view capital goods stocks with the context of this?
You are absolutely right that private capex is not picking up, in face of uncertainty on tariffs and in face of uncertainty regarding dumping from countries like China. It is difficult for capex to really take place, but there are a lot of companies which are supporting the capital goods industry, and I think those make interesting bets. And I think if India has to grow at 7% for the next 2 decades, then we will require more infrastructure. We will require more roads, more ports, more railways. So all these have many companies which are supporting these. So while private capex might not take off, but the ancillary companies which are associated with the infrastructure and capital goods industry, they will continue to do well.
Okay. Sandeep, what about the IT sector? How are you viewing that at this point of time? Because, we will be having TCS on 10th of July. Would you say that this sector would be still in a wait and watch situation until we have the tariff contours out, or how are you spelling out?
No, I think I agree with you. I think it's IT is more on wait and watch sector for us. We are more bullish on the smaller companies which are services companies, but which are slightly niche in nature, where the growth is higher. As at Trust Mutual Fund, we are a mutual fund which believes in high growth, investing in high growth companies in different sectors. So while we do not expect IT as a sector to grow very fast, there are uncertainties on the currency part, on the US economy, and on tariffs. But there are a lot of companies which are more niche, which are growing very fast and fit our investment model, and hence we are invested in slightly small and mid cap IT companies.
Okay, okay. Let's also talk about auto sector, because we did see the sales numbers yesterday, and while two-wheelers have still fared better, PVs were the underperformers. Would you suggest investors to bet to be more inclined towards two-wheelers or even tractors for that matter, instead of a Hyundai Motor or Maruti Suzuki?
See, I think that the rural economy is doing slightly better than urban economy. The rural consumption is sort of picking up. Monsoons are better. Interest rates are lower. Everything points towards better numbers likely to come out in the two-wheeler segment and tractor segment, which are more dependent on rural consumption. So yes, I would think that that would be better bets than mainstream cars and autos and the large auto companies.
Hmm. Okay, okay. Just one last question before we let you go, Sandeep. Everyone is chasing Nifty to clinch all of that lifetime highs. Do you believe this month is the month that could do the trick for the Nifty?
See, it's very, very difficult to, predict about short-term movements, especially on Wednesdays. The other bad days to try to predict short-term movements are Mondays, Tuesdays, Thursdays, and Fridays. So short-term, nobody can predict. But long-term, I think one has to invest with a long-term view in mind, and I think that's the only way to succeed. But your guess is as good as mine for this week or this month.
Okay, all right. All right, with that, we have to let you go, Sandeep. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha.
All right, let's quickly take a check of the markets. We have slipped into the negative territory. We are off the day's highs. We've raised the gains, and the Sensex is also down, very flat in the red at this point of time. And Nifty is also slipped below the 25,500 mark at this point of time, 25,550 mark at this point of time. If you look at some of the sectoral indices that has contributed to the losses, financials definitely one of them. Bank Nifty index down about by 0.3%. Nifty, FMCG, infrastructure, all of them not doing well. If you look at Nifty oil and gas, that is also slipped into the negative terrain. Other than that, PSU banks and of course realty index with about 0.4% cut. But yes, we'll watch out whether there is an improvement in the breadth of the markets towards the intraday trading session. But for now, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks have been in focus. Until then, signing off.